I will now like to go over with you exercise 1, comprehensive income. If you remember in chapter 4, the income statement chapter, we did study comprehensive income as well as accumulated other comprehensive income. We worked with that in the uh, chapter 12, the investment chapter. To just bring a little bit of memory recall back, is comprehensive income can be added to the income statement where they would start with net income and then make changes in the net income for other comprehensive income transactions, which usually result in a change in net unrealized gains and losses for available for sale securities, gain or losses from the amendment of post-retirement benefits, deferred gain or losses on derivatives, and adjustments for currency translations. Now, adjustments for currency translations will be taught to you in advanced accounting, as did some derivative transactions as well. But what I want you to know in the comprehensive calculation, the four listed in front of you for requirement 1 are all net of tax. So it's the net of tax, could be a benefit or an additional expenses. Now, if they use the approach on the income statement, it would start with net income, and then it would list the most common comprehensive income transactions, which you see in front of you, of the unrealized gains, amendments to post-retirements, gains and losses from derivatives, as well as adjustments for currency. They are all shown net of tax. Or it can be another separate statement on a new page where they would start with net income and then make the comprehensive income adjustments net of tax to get to calculate comprehensive income. And that's on the income statement. On the balance sheet, the change in comprehensive exchanges or comprehensive income adjustments is the net of the changes. Okay, so now let's look at this. In exercise 18-1, we have comprehensive income, and they give us the statement of comprehensive income where it's not below the net income on the income statement. It's a new statement of comprehensive income, and for the 2021, 2020, and 2019, they start with net income. Their other comprehensive income is the change in unrealized gains or losses for available for sale securities net of tax, and they give us the net of tax for each year. And the other could be the three listed. Now, they also report accumulated other comprehensive income in the balance sheet, and you can see the bottom line is accumulated other comprehensive income. You're very familiar with the common stock, additional paid-in capital, and retained earnings. What is the comprehensive income, and how does it differ from net income? Well, the one thing I want to basically talk to you about is that the difference between net income and comprehensive income, if you remember, the comprehensive income is the result of non-owner changes. We talked about that early on in chapter 1, where income statement is the result of owner type transactions. So that's the biggest difference. And also, as they point out here, they only ask about the comprehensive income, and I've explained to you that comprehensive income is on the income statements, and there's two ways to present this. It can be completed on the income statement or it can be completed separately as we see in the problem given to us in exercise 18-1. Now, how is it reported in the balance sheet? As you can see in the balance sheet, there is the accumulated other comprehensive income from 20 to 21, okay? And we'll see how they calculated 75 and how they came up with 107 in 2021. Why is the Kaufman 2021 balance sheet different from the amount reported on the income statement or the disclosure note? And pretty much the biggest thing with that is the actual presentation on the comprehensive income account is they are reported net of tax. Note that on the balance sheet, the accumulated other comprehensive income, you don't see net of tax, but you will see in the adjustment in statement 4 that it really is net of tax, but it's not noted on the balance sheet. And the statement of comprehensive income is a report that changes based on the beginning balance, which in this case in 2021 was 75, and the ending balance was 107, and the result is the change of the other comprehensive income calculations net of tax in the 2 years presented, 2021 and 2020. And you would do the net. So if you look at 2021, the change net would be 34 minus 2. You only focus on the other comprehensive income line items, not the net income, because you know that net income is closed into retained earnings. Now in requirement 4, from the information provided, determine how Kaufman calculated the $107 million. Well, the balance sheet for other comprehensive income is 75 at the end of 2020, which is the beginning balance for January 2021. And as I pointed out to you, the only adjustment is for the unrealized gain and other comprehensive income, which is already shown net of tax. So if you take 74 plus 34 minus 2, your accumulated other comprehensive income in 2021 is 107, and it's the result of the other comprehensive income transactions, which are non-owner transactions, in 2021.